Alrighty, what is going on, ladies and gentlemen? Today we're going to be talking about confidence in the market. Now, confidence is based off of two things. It is knowledge and execution. How do we gain these? Let's define what confidence is. Confidence is you go into the charts, you understand what the daily profile is looking like, you understand what the markets are looking like, you understand your trading strategy fully, you execute on that trading strategy, and then you hop off the charts and you're done for the day. That is confidence in itself. If you can master those properties, your confidence will skyrocket way more than any other thing that you're going to do. But with that, again, you need to learn knowledge about the markets, about the strategy, about the executions, which in turn leads to a better psychology, better confidence, so on and so forth. Now, how can we use the market structure to give us more knowledge and more confidence going into that day, or less confidence going into that day? Easy. Just go to the high time frame. I'm going to show you a picture of what this week's data look like, and it looks terrible. So this week, we can just understand immediately that if the market looks like this, we're going to have less confidence going into the day because it's very wicky. The hourly and the 4-hour candles are closing very, like the body of the candle is less than the wicks themselves. And price isn't moving how it usually should be, which is taking out draws cleanly, 1 to 2 candles, or taking out London high, London lows, that type of stuff, and then bouncing off of that. With that in mind, if we can use that knowledge of the high time frame not looking good, we can go into the market open understanding that this week or this day will be on the edge about taking a trade because the market structure on the higher time frame doesn't look good. How can we use daily bias on top of that to combine it with market structure to give us more confidence going into the day? The one thing I want you guys to all avoid is going to the day with a set bias. If you go into the day with a set bias, you're already going to lose that day. Even if you go into the day with a right bias, you could still get wicked out by, again, unprofitable conditions, or you could have the wrong bias completely and just take a losing trade that you shouldn't have taken because you were using your predictionary bias instead of a reactionary bias. Daily bias should be something that you write down pre-market that you would like to see and then react off of the market once it does happen. Because again, knowledge is confidence. If you can write down a daily bias and be like, hey, I want London lows to get swept and the reversal off of that to target an unfilled gap, and then market doesn't give you that, you're just gonna have to react off of what market gives you. You're not gonna just, I'm done. I'm sitting out for the day. I'm not gonna take a trade. Because you could miss out on a good trade still just because your daily bias, your predictionary daily bias was wrong. And combining that with market structure and understanding market structure when things are profitable and unprofitable, it can give you an advantage already because you're going to go into the markets with more knowledge, more confidence in that day, and then your execution, which is the final thing that I want to talk about today, is your strategy. If you cannot execute and feel confident in your execution, it is your strategy that you are unconfident about. And you need to fix that through 2 ways. The first way is backtesting. You just need to backtest a shit ton. Go into Forex Replay, go into TradingView through their replay mode, and just backtest months worth of data. And that will give you 2 things. First, the confidence in your trades, right? And second of all, it'll show you if your trading strategy is even profitable. And a lot of you guys are trading strategies that you are not even profitable in. And or you are using your strategy in the wrong way and you don't even know the discretion of your strategy, which is again, leading you to have more losses. For the most part, most of you guys understand how to do that. Backtest months worth of data, understand if your strategy is even profitable, and then understanding discretion through backtesting. We understand that. The secret thing is when market conditions that are not good present itself, you can forward test that data. You can go into the live markets when it's happening and just sit back and relax and just watch what is going to happen. And again, forward test your strategy. You don't need to execute on trades if the market conditions are bad, but you can still learn off of bad market conditions. And a lot of you guys don't even do that. As soon as you quote unquote see bad market conditions, you just hop off and don't even try to understand why market conditions are like this or why the market is moving like this. This is a huge part, and a lot of you guys miss out on this opportunity that happens every single day. And you guys need to hop on this because it is literally a cheat code. Not only will this help you with your market structure, your executions, and your strategy, but it can also help you with your psychology. Because if you can sit on your hands and look at the charts and not take a trade, but mark it out and see what it plays out in your favor or not, you're gaining first, again, knowledge, which leads to confidence. Because then you will understand that, oh, when this happens during bad market conditions, I either do or do not execute on my strategy that will then lead to a better psychology. You see how all this is just connected? Forward testing is a cheat code. Hop on it. You just need to do it, especially in bad conditions. Especially this week. If you didn't do it this week, I guarantee you a lot of you guys lost this week because you tried to force trades. Because again, everything I just said. Now, how do I combine all this and give it to someone who has no idea what day trading is? To simplify it to a toddler. Figure out market structure. Understand your strategy. Executions. That's it. Understanding your market structure, understanding when it's profitable and unprofitable, understanding your strategy, if it's profitable or unprofitable, and when to take it. Third, executions. Forward testing, live market testing, back testing. It's as simple as that. When you understand market structure, it'll help you understand your strategy. Once you understand your market structure and strategy, you can then learn discretion, and then you can learn how to execute properly. And once you learn all three of those and execute on all of them correctly, it will help you with your psychology because you will gain more knowledge, which will then gain you confidence, which will then gain you a better psychology because you're not going to be taking stupid losses in stupid market conditions. You're going to be a smart trader, not a dumb one, right? Right? Good. Good. Now get the hell out of here. I hope you learned something.